Hello guys, welcome to our weekly Forex forecast. We're gonna start with Euro US dollar. First, let me just recap on our last week's analysis. Let's just recap on our last week analysis. As you can remember, guys, that we said last week we're gonna be taking this trade. I think last week we were right here. Last week we were right here. We said we're gonna continue going up. Then we got this move up. Then we got our profits. We are out on this trade right now as we speak. So we got this one right. Okay, let's go to Great Britain, US dollar. On this one, last week we were right here. Then we said we are expecting a move down to these levels. But instead, we got this move. Our stop loss was hit. We lost this trade. We lost this one. Let's go to Australian US dollar. On this one, last week we were right here. No, we were right here. We're right here. We said to you guys that we're expecting a move this. Instead, the market went up. That means we're wrong. But if you guys remember, we said we're not going to be participating in this one. We did say that we're not going to be participating unless it comes to these levels. That's what we said last week. So we didn't participate in this one. Let's go to CAD Japanese yen. On CAD Japanese yen, we said to you guys that this is a triangle. This right here is a triangle. And we said our market is trading below this trend line. We said we've got a trade, an open trade. We said we are on break even, and the market moved against us, take us off at break even. Then again we went in, it was on Thursday, we went in again. So we've got a trade here. So this one is still fine. So let's start with this week's Forex outlook. We're going to start with Euro US dollar. With Euro US dollar, I want you guys to notice something, that we are on a monthly demand area. So on a monthly demand area, you only do one thing, it's buy. You have to buy because we are on a monthly demand area. Okay. But you don't just buy. You will have to go to the daily time frame where you can execute your buys. Okay. At the moment, the market is not clear. So what is going to help us here is wave analysis. Okay. Let's go to wave analysis. Now, remember, on a monthly demand area right here, that means we were supposed to be looking for buy opportunities only. Now, wave analysis is going to help us in such a way that we need to know that is it fine to buy or not. As you can see that we've got a W, we've got an X. Now, when it comes here, we've got a little bit confusion, or it's not clear whether this is wave 4, then this is wave 5, or this is wave W, this is X, this is Y, then it makes X. Then if this is X right here, we will be getting a Z. That means we can break these lows. But if this is A, this Z we won't get. We will just get a move. We'll just get a move higher. If this here is A, we'll get a move higher from here. Okay. So those are the scenarios, but let's go to the lower time frame. It's gonna be more clearer on the lower time frame. Let's just remove this one. Let's just remove this. Start from the weekly. On the weekly, we've got A. This whole thing right here is B. Now, we're expecting a C, but this C, as you can see, let's take our extension Fibonacci tool. As you guys can see right here, that this is 61.8. Our C has reached 61.8, of which it qualifies to be a complete C. I'm not saying it's a complete C, but it does qualify. That means it's it won't be bad for us to look for buy opportunities for a move higher. It won't be bad. Né? But at the same time, seeing that it doesn't want to move immediately, so we need to weigh other scenarios that can be folding out here. Okay, so that's the weekly. Let's go to the daily. On the daily, if you can remember last week, as we said, we are expecting to this move. Now, what can be happening here is that this right here can be a complete C. Now, this right here B. Now this right here be a 1. Okay. Now this right here 1, 2, 3 can be a 2. That's possible. If this is a 2, that means we'll be getting a 3. That means we're expecting to break these highs right here. Expecting to break those highs. That's one scenario. Another scenario is that this can be A, this can be B, this right here is C for a move down. That's another scenario. Okay. Let's just remove this again. Now, your question can be, what are we going to be doing next week? Next week, as it is now, there are two scenarios that can be happening, that we will get a move, this move down to break these lows. That scenario is possible. That's the first scenario next week. Or the second scenario can be this. The second scenario can be this, that we get a correction to these lows. If we get a correction to these lows, then we will be continuing up. Those are the two scenarios that we will be looking next week. It's going to depend how does the market fold out. As I said before we start earlier, that we are on the monthly demand area that we need to take into consideration. We can't just ignore it. Okay? So those are the two scenarios for next week's, that we get a move down to break here, or we get a correction. If we got a correction, then we will be going there. Okay, those are the two scenarios that we are expecting next week. Now, you guys must check on the 4-hour time frame. It's going to be more clearer on the 4-hour time frame, 1-hour time frame. It's going to be more clearer. A correction is going to be more clearer, or a quick move down is going to be more clear. What you can do here is that draw maybe, let's just do this. You draw a trend line here. Then what can happen is that the market moves impulsively. If it moves impulsively, then breaks this trend line, you must know that we are going down. But if it corrects, it can just move higher. Those are the two scenarios for you next week, guys, on this pair. Enough about Euro US dollar. Let's go to the Great Britain pound. Great Britain pound. Our analysis will be the same as last week here. Now I'm gonna show you scenarios that can be folding out right here. One is that, okay, we agree that this way from here to there is 1 to 5. Then we're expecting a 3-wave pullback. We got this one, we get this one, we're expecting this one. Now this one can end here, or it can come to these levels. We're expecting that one. But what we now, you might be asking, what are we going to be, how are we going to be approaching the market? Us, we will only buy if this market first comes here, or at least give us this move to these levels, at least. That's at least. Then we go up or go up. Okay. That means we're not gonna be looking to buy if it comes and bounce here, go up. No, we're not gonna buy this one. We will only buy if it comes to these levels or these levels. All in all, we are looking to sell. There are two things that we can do. We can either sell for this or this coming week. If it doesn't break here, but it goes up, we won't sell, we won't participate in this market. We'll only participate if it breaks here, then maybe it can come here or it can come here. We'll only participate if it does that. Okay. And let me show you on the supply and demand. Now, you guys, I think last week I told you that you need to be careful of this area right here. This area is a demand area because we broke these highs, then we went there. So this area is a demand area. So you've got buyers here. There are buyers here. You need to be careful of this area. You mustn't sell blindly. Otherwise, you'll meet buyers and you'll lose money. You need to be careful of this area, guys. Let's go to Australian US dollar. Australian US dollar. Now, on this one, this looks like a leading diagonal. We got this can be 1, this can be 2, this can be 3, this can be 4, and that can be 5. This looks like a leading diagonal to us. So if it's a leading diagonal, we will be selling this market next week. I repeat, if it's a leading diagonal, we will be selling this market from these levels to at least these levels. We are a seller on this market next week. We will be selling this market next week. From these levels to these levels, we will be selling this market next week. Okay? CAD Japanese yen. CAD Japanese yen, as we said, as of past 3-4 weeks, we've been saying we are sellers on this market. Now we are expecting, we've got a sell trade here. We're expecting it to come to these levels. At least we're gonna take our first profits here on these levels, or it can even go lower than this. We will see, but we've got a trade already to these levels or even lower than this. That's how we see it. That it can even come to these levels, right? Oh, sorry about that. That it can even come to 61.8 Fibonacci extension. So that's how we're going to approach the market this coming week. I hope this helped you guys. And I want to tell you this one thing, guys, that there is a difference between analyzing the market and having an entry strategy or trading. Analyzing the market means you look at the direction of the market, that at the direction at which the market can take. That's analyzing. Now, taking a trade means you are putting your money online on the basis that you've got an idea or bias that the market is either going to go up or go down. Okay, you need to separate these two things. Okay, analyzing the market is one part, one very important part of trading. Also, having a strategy to participate in the market is another part of your success in the markets. Being able to analyze the market doesn't mean you will be successful in the market. No. But the combination of analyzing, being able to enter trades, or having a strategy of how to enter, when and how or where, is another part, number two. Number three, your risk management. Your money management is one of the vital ingredients of one who can be successful in the markets. As I said to you guys, that we lost the Great Britain US dollar trade, but we were on break even, and we took a trade on Euro US dollar and we won that one. It was the risk reward ratio on it was 1:3. That means if we always risk 1% of our account, okay? Now that means if we lose one trade, but we win another trade, that means we've lost 1%, but we've made 3%. Now, when you do the calculations, you will find out that we didn't lose. We made profits. That means we made 2%. And also diversifying your pairs that you are trading. You need to diversify. The market, the Forex market has got close to 26, 28 pairs. Being one person, you cannot afford to trade everything. You don't have to trade everything. It's about making money. We are here to make money, not to prove a point that we can trade 28 pairs, of which it's almost impossible for your concentration, and or because of they are correlating. These pairs are correlating. So that means if you take a trade on Great Britain US dollar and Euro USD or Australian USD or USD Japanese yen, all these four pairs have got a US dollar in them. That means they are correlating. So you are not a wise investor. Your diversification is not proper. You need to diversify, trade a few pairs, at least 4. For us, we are trading 4 pairs. Okay, at least 4. Diversify, good money management, have entry strategies, be able to analyze well. Those 4 criteria will take you places. Okay, so I hope this helps you guys on your journey into being profitable in this market. Thank you. Have a great week ahead. Hopefully you will be making money this coming week. Thank you so much, guys. And also, guys, don't forget to subscribe to our community so that we can grow, we can give you more tips. Okay, subscribe, share, like our videos on our channel, and also share our videos on our channel so that our community can grow. Okay, so that we can give you guys more content that can help you. Thank you, guys. God bless you.